What is going on, everyone? My name is Bo Crable, and in this video, this is something I'm super passionate about. I want to explain to you why day trading is really not a good thing to do, and why other forms of investing is probably much better than anything besides day trading, okay? So day trading, for some reason, just attracts a lot of people that want to get rich quick. I really don't know why, and it's actually never came across me. I remember the day where I was explaining with my family that I was finding all these cool things with dividend stocks and investing, things like that. And are you talking about day trading? I'm like, what's day trading? I literally had no idea what they're talking about. Oh no, you should do day trading. And I had a family member actually try to buy me a day trading course. I'm like, I watched the video, I was like, no, that's definitely not what I want to do. That sounds really hard, and that sounds really not fun to do. So there's gonna be three reasons why I personally believe day trading is just not the move. Okay, the first thing on why day trading is not the move is that it encourages investing into risky assets. If you watch any day trader, what are they day trading on? They're day trading stocks that are popping right now, or they're really volatile right now, that have big movements. And the issue with that is that's really bad for a beginner investor, because you start to correlate that big movements means big profits. But what also means big movements is big losses, and that can be really discouraging. So, it's just not a really good thing to do, because, that's just really bad, because, most of the assets that do appreciate in value are boring. You think of real estate. Okay, real estate is not going up and down 10% in a day. It might go up a couple points every month, or a point a month, or half a point, depending where you're at. And if real estate's really dramatic, went up 4% in a month. Or even really high quality stocks. Take, for example, Apple, or the S&P 500. It's a really dramatic day when it goes down 3%. Day traders will look at a stock and be like, nothing I can trade now. Things aren't moving much, and things are moving 4 or 5%. They want to see something that's moving 20, 30, 50, 100 something percent, doubling, cutting in half, all these crazy things. And that's just not a good encouragement for beginning investors. The second thing I want to talk about that I truly just is a huge disconnect is you're learning technicals, not fundamentals, which is a completely big difference. And I don't understand this, because I think I really just loved math when I was in school, and I just geeked out about statistics. That's why day trading just never made sense to me, because it was never about statistics. I'm wait, we're buying and trading and selling financial assets, and financial assets only relate to math and statistics and things like that. So why are we looking at charts? Why are we looking at technical weird patterns that, if this does this is the solar moon eclipse that goes to the moon? That doesn't make any sense. So with stock trading, you're typically looking at one or two things: technicals or fundamentals. So let me explain to you what fundamentals is associated with. So fundamentals is how much a profit does the company make? What's their profit margin? What's the growth rate of their revenue? What's the dividend yield? How many shares are afloat? What's the short interest? What's the PE ratio? What's the market cap? Even then you could go to company information, how many employees do they have? What's their rating on X, Y, and Z? You're looking at information that's fundamental. Technicals is okay, where is it trading in the last X days? Or what's the volatility of this, or what kind of patterns is it making? And it's pretty much anything that's not related to the actual fundamentals of the company, of the actual profits. And at the end of the day, again, this quote from Warren Buffett is very simple but really amazing. I'm going to butcher it a little bit, but it's about how in the short term, stock trading or stocks are just it's a bet. It's people are betting, back and forth. And in the long term, it's a weighing game where it's companies make profits and it pushes it down and weighs it down, or builds it up and everything. And over the long term, you'll see it, because people who analyze stocks, they do a few things. And one of the main things that they do will look at the company's earnings dates, or their earnings reports, which only happen 4 times a year. So let's think about that. Most people that are analyzing stocks, they're going to look at this report that only happens 4 times a year. That's it. And then you have these day traders that are looking at things intraday, this little pattern to this. Okay, there's nothing that you can predict that in 1 hour from now, XYZ, let's say it's a stock that sells plant-based food, that they end up having, they come out with a partnership with a big fast food chain. You're not going to predict that. That's nothing a chart can see. So that's where it becomes a disconnect from you're disconnecting from what a stock actually is. Like a stock is ownership into a company. So when you start correlating stocks with things that make weird triangle patterns, you're disconnecting on what it actually is. So, I mean, it's possible to like look at technicals and make profit from that, but it's really, really, really challenging. The third and last thing I want to talk about is how it consumes you. Like if you have two choices. You have more than two. You always have more than two. But let's say you get into day trading, okay? You either do well with it or you're gonna probably lose money or you're gonna kind of keep trying to cut at it. But if you have a limited amount of money, you're probably gonna end up quitting if you don't do well at it. So, but if you do well at it, congrats. But you still may not be a winner because let's say you have 100 grand for day trading and like if you make 30%, whoa, you're really, really good. Like you are, historically on average 3 times better than, but however, this is what day traders always don't look at. You need to see what is your returns after taxes and also after the return of the S&P 500. Like a lot of day traders will make money, but then if you factor in other like commissions and fees and taxes because you had to trade, you may have been better off just holding. But the issue with this, it takes up so much of your time. And you might be like, okay, Bo, it doesn't matter. If I'm making a bunch of money, it doesn't matter. Well, you could have been made money with other things. And investing is supposed to be passive. Like it's supposed to be a passive growth. And like imagine if the whole world was day traders. Imagine that. If everyone was just day trading, well, the entire society would collapse. And now that's not my argument saying why day trading is bad, but for you, specifically, personally, you start to only have that be your life. Where then maybe you could have built a really amazing business that crushes how much money you could have made with day trading. Or maybe, you want to start some type of cause, or you want to work for a really cool company, like your dream job, or maybe you want to do X, Y, and Z, doesn't matter, right? Like there's other things in life that you can make money with besides just trading. And here's the thing. Let's take Bob and let's take Sally. Bob day trades all the time, and he makes a really good turn. He's a really good day trader, and he's making 40% a year, and he's got like a $500,000 portfolio, so he's making enough money for his expenses. He got a little bit of left over, and then maybe one day he made a lot of money, he got a nice car. And you have Sally, who she has her own small business. She's working really hard on it, and she just makes investments that are low risk, that have passive returns, and then don't take a lot of time for her to manage her portfolio. So she's buying real estate, she's buying stocks, maybe she's selling options on some of her stocks, maybe she's dabbling into some crypto, and it's not really a main focus for her. Like she knows she has her assets, she knows they go up in value, and that's cool. But then she focuses on her business, she's making money, and then she pays herself and she dumps into her assets. She puts money into the fire. She grows it. And then you have Bob, he doesn't have any like logs. He doesn't have anything to push into his fire. He can't keep fueling that because the only way to fuel it is him making money from trading. So who do you think is going to win the long term? Maybe Bob gets really, really good, but then boom, one mistake happens. And he's not getting a lot of turns. Or maybe he goes a couple years without making a lot of turns, and boom, Sally's not even worried about it, and it's growing. And then maybe Sally, over a few years deposits 400 grand into her account because she started to make a lot of money with her business. Or maybe not even it's 4, maybe it's 40 grand, maybe it's 5,000. That made a huge difference for her. So as you can see, again, back to Warren Buffett's quote, in the short term it's a betting game, and the long term it's a weighing game. So Sally is growing, active. Maybe she's not even running her own business. Maybe she just has a company, or she's working for a company, she's making an income, and she just keeps putting logs and fuel to that fire to her passive assets. And then Bob is just trading back and forth and hoping to win and doing nothing else. Like how devastating would that be? So yeah, that's kind of why I just I get a little bit passionate about day trading, because I do believe you can make money with day trading. Like, don't get me wrong, I do think people can make money with day trading. You can learn the patterns, you can learn technical analysis, and technical analysis is not like fake. It's not like Fugazi. Like it is generally a real thing. I do think it's a little bit overhyped, and it's something that I look at it, my brain just doesn't even want to even get too much into it, because I'm more math focused, more looking at the statistics, looking at the probability, and want to have passive assets. So yeah, if you like this video, subscribe. Also check out the links down below if you want to learn how to trade options and want to see any other type of options trading software. And subscribe, and I'll see you in the next video.